Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is December 15th, and we are coming at you the day after the FOMC announcement. If you watched yesterday's episode, we broke down our thoughts on DXY equities, Bitcoin, Ethereum, and where we thought things would be headed. As demonstrated by the price line on the sentiment chart, price action continually deteriorated into this morning. Sentiment is still bearish, about the same level of bearishness as when we spoke yesterday morning. Dipped lower, recovered a bit. We have hourly sentiment currently, but are not seeing much movement from that action. So take it with a grain of salt. We do have lower tweet volume and we have continually lower trading volumes. Looking at Ethereum sentiment, still steadily bearish. Trading volume is down. Tweet volume is up slightly. So definitely a little bit positive there. But looking at the actual charts, one of our biggest here's the right one. One of our biggest indicators of risk versus reward, if we want to call it that, was DXY. And DXY, as we mentioned yesterday, was right around this level, poking at the low of support that we had drawn last week. And we are headed higher, towards that 105 level, as I mentioned yesterday. So due to this, I think is a direct reason why we saw equities take a huge tumble, as well as Bitcoin and Ethereum. So looking at DXY, moving out to the daily, we can see we have broken through the RSI trend that I mentioned. So if this is, if my thesis is correct based on the RSI trend break, RSI will end up heading higher towards the top of the RSI range, which would be, around 70, potentially higher. If there is momentum to the downside for risk. And, this formation to me, although we have not broken, I don't want I want a trend line. Although we have not officially broken the downtrend from a legitimate trend standpoint, we have broken through the RSI trend. We need to confirm this break, of course. We still have 6-7 hours until this will confirm either, at this level, 104.7 or higher, or potentially lower. But we'll be continually watching this RSI trend break for signs of a confirmed break, which would then likely put risk assets in a very precarious position. So looking at equities, we'll zoom out a little bit. Let's get rid of some of the noise on the charts and just kind of focus at the range. So we broke beneath the original range that I had outlined, from 3,900 all the way up to 4,100. We're beneath that, as well as the uptrend that I mentioned that we might tag yesterday. We tagged that, or we broke through that, not even tagged, very early this morning, and have continued pretty much a straight plummet down. If you look at this from a broader perspective and you think about this as, kind of the range where I mentioned we were seeing consolidation, and typically you would see this end up rolling over. I was correct there. And so typically, the way you look at this is rejection at the top of the trend, deviation over the trend, back through the range, crushed it. Now, what we have to look out for is potential range deviation here, where it could somehow catch and then head back up towards the end of the downtrend and retest that downtrend. So potentially retesting that, I would say, likely would be, of course, if you can get back above 3,900, this is predicated on. So if you can form some sort of swing failure pattern and get back above 3,900 or 3,905, really, then you have a pretty good chance to get back up to maybe 3,950. And if that's the case, I would expect, potential rejection further. And that's typically how, we generally see that. Or, of course, we could just continue slicing straight down. And just to look at some potential areas of interest for a potential range is right here. Let's see where else we can quickly draw. And of course, this is going to be quick range drawing. So, nothing extremely definitive here. I'll probably end up editing these heading into tomorrow. But just preliminarily, this is where I would expect some price action to occur. Top of previous trading early October, saw a lot of volatility at this level. Also, top trading late September. We saw a lot of trading around this level as well. And then, I would say potentially lower, something like this. And then obviously we have the swing failure pattern from the low. And then we have obviously the low itself, which is very important as well. So we've got a lot of key levels to hit, and of course I may edit these as we continue throughout the week and into next week. But preliminarily, I would expect us to probably continue down. Maybe some volatility upwards, retest that 3950 level, but otherwise, I would say 3800, potentially 3720 is looking more likely. Especially if we confirm back into this range that this kind of ugly range between 3,900 and 3,700 that I created just now. So equity is not looking very positive. How is Bitcoin looking? So let's zoom out to the 4-hour, get a bit better of a picture. As I mentioned yesterday, swing failure pattern up above this level, back down into the range. We could potentially form a larger range here where you bounce and you hit 17.8, try and flip that, maybe swing failure pattern up and then head back down. But if equities keep continuing down, then it gets harder for crypto to have momentum. And you see we have a lot of liquidity interest at 17.15, as well as, right around, 16.95, 17K. So 17K to 17.2K, I would expect to start to see some interest. But of course, we could very well catch here. First target would be the VWAP right around 17.5. Next target would be the previous daily close around 17.8. And of course, if 17.3 fails, then you're probably headed lower towards 17.15 or somewhere around that range. To zoom in a little bit, just to give you a bit better of a picture, let's get rid of some of these lines. You can see how ugly the trading is. Obviously, it's trying to form some sort of support around the 17,370 level, 17,370. And so that's why this is a key level. Break above, there's your VWAP, maybe get up to the previous daily close. And then, of course, if this fails, you've got this 200-day moving average, which might act as a little bouncy point, which coincides with the top of this range. But we've got this POC here where there's a lot of interest. Then obviously we've got a lot of interest down here and down here as well. So I'm expecting, especially if equities do, continue lower, we're going to probably follow this path with maybe if we accept below here, then that would flip to resistance. And then we come back down here, flip back up. And so there's your kind of general movement for the next, 12 to 24 hours heading into Friday. Of course, it's extended out because I'm drawing, lines that are not relative to the actual, times, but you're getting general sense of movement. And of course, if momentum continues downward, then we'll obviously meet those levels very soon. I will warn that obviously we are beginning to get a bit oversold on the hourly, and I think that's why you're obviously seeing some support catch, and why we may end up seeing a VWAP touch or potentially a previous daily close touch. But I would say that's less likely, provided DXY continues higher. Looking at the 4-hour again, DXY continuing higher and equities potentially continuing lower would obviously assist downward movement for Bitcoin. So looking at Ethereum, sitting in the kind of the middle of this range, zooming out, as we discussed yesterday, the larger range, 1300 all the way down to, 1220, deviated above the range, double top. This is when we spoke yesterday. We dropped lower towards that 1280 number that I mentioned. We obviously continue to drop lower, hovering around 1270. So if 1270 holds, then maybe we do what I mentioned with Bitcoin, where we kind of head up. Maybe, resistance will be at 1280. Potential, resistance, continued resistance is 1288 and 1300. I would say that would be very tough for Ethereum to get back up to. But of course, we could see some random volatility where, we get a little short squeeze, close out all of the leverage, dipping up at least into this level before heading back lower. But, again, if DXY continue higher, equities continuing lower, we probably continue some sort of ugly cascade lower, with 1250 being next level of support and 1220 being, solid support. And I think a lot of people will probably look for longs at 1220, considering, all of this stuff that we have here, all this trading, there, as well as, holding support here previously, and, and kind of more or less rejecting that entire level for the majority of December and a bit of November. So I would definitely expect 1220 to hold strongly. We have a lot of liquidity interest here. We do have also a lot of liquidity interest here, which is why if this level fails, then we're probably headed back down to 1220, due to the fact that liquidity will probably end up drying up, and then people will look for the next level, meaning 1250 or 1220. So my personal opinion is we likely see more downside heading into Friday. Maybe we have a little bit of an excited Friday morning rally in equities tomorrow, and then we end up cascading down into next week. I'm not very, based on what the Fed said yesterday, we went over this in yesterday's video, it doesn't much excite me with them, both saying that they are very committed to 2%. The rates will likely be higher for longer. 5.1% is now kind of consensus of peak Fed funds rate, all the way up to 5.5%, because obviously that could change. So people are saying it's definitely going to be above 5% by the time that they're done raising rates. And that doesn't really inspire a lot of confidence in markets, because of obviously what we've seen in relation to rising rates versus a successful market. So higher for longer rates, keeping at 2%, and unemployment not really loosening the way the Fed wants. It's not really going their way in every single way, other than the fact that inflation is starting to trickle down, which is positive, but it doesn't mean that they can let up on the gas. So they are going to continue to nurse their narrative, which it seems to be quite hawkish. Of course, that could change with different outlooks as we head into January, but seems that Jerome Powell really stifled our potential Santa rally, and whatever Santa rally, whatever we want to call a Santa rally, seems to have already come and potentially gone. We will see if we can hold, 1250 or 1220. I'm sorry, 1250 or 1220 for Ethereum. Let's just 1250. 1220. If we can hold this kind of general area, potential good area for longs. And of course, if we can hold, down to 16.9, potentially higher, good area for longs on Bitcoin as well. If not this area, but we may see some slight volatility higher, but I still think we'll end up down lower by the time I talk to you tomorrow, or by the time we head into the weekend. So I wouldn't look for any overzealous longs unless you're really scalping. I wouldn't really look for any overzealous shorts either, because, we've already seen a lot of downside action. So I would, look for scalps until you see a strong rejection. And a strong rejection for Bitcoin would be at that 17.6 level. And a strong rejection for ETH would be at that 1280 level as well. So keep a lookout for that, and good luck and happy trading. If you're not in the Trade the Chain community, that's where all the juicy stuff comes in, and where we, input our acute analysis both in the morning, afternoon, and night. So if you want to keep up with all that, as opposed to just the daily videos, tradethechain.com for your 14-day free trial. Else, I'll see you in the community and online tomorrow. Have a good day and good luck trading.